This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome back, everybody, to Avoiding the Crowd podcast. I am your producer for the show, Robert Kraft from SNN Podcast Network, and your host, Maj Soueidan. We got a packed crowd here today because we got a really cool episode for everybody. It's going to be the first in a series that we're going to do on here called the Portfolio Protection Series. So don't worry, you're not going to be hearing much from me this episode. This is going to be Maj and his crew here. So with that, Maj, take it away, my friend.
Thank you, Bobby. Really excited to do this. This is something we talked about for some time. And the purpose of this whole series is to not really say, this isn't about shorting or, calling companies fraud. This is more about educating investors about certain aspects of companies that they might want to understand more clearly before they either want to go short or long. We're trying to call out the bullish and bearish kind of theses in some of these companies we'll be looking at. And I think that'll be really cool. The company today, none of us here has any position in the stock. We're not short or long the stock. And so I'm really excited to get this going. And I have a really nice crew here, kind of a diverse crew. Michael Woloski, Svenda, is it Tyler DuPont?
Yep.
Yeah, so we definitely got a packed house here today, and some three investors I really respect, and not only as investors but as their work as analysts. So why don't we get into it right now? We'll talk about how I met them later. So Michael, will you talk about yourself and how your background and what you're doing?
Sure. So my name is Michael Woloski. I have a background in economics and finance, and the first time I met Maj was about 6 months ago. What's funny is that purple came up in our very first conversation. Oh, actually more than that. It was almost a year ago. It came up in our first conversation, and I'm excited to be here. In addition to doing, stock analysis research, I also do some work with fixed income. So I'm really excited to be here. Thanks a lot, Maj.
Yeah. Jan?
Great. Well, thanks for the invite as well. And I'm coming from a background of OTC obscure stuff, through which I got to a more kind of fundamental research into short selling. So now I could kind of say that I do long OTC and short, the 3 Fs, as Marco Hodes likes to say. But I think the background of just deep OTC kind of gave me a way of researching things a bit differently and trying to really understand the details and try to really dig up the original information, because that's what you have to do in the OTC. So that's kind of how I got to short selling. And I'm excited to kind of start the portfolio protection with Maj and Mike, just because I think it makes a lot of sense in the current market. And as you will see, the company that we're going to be discussing today, I think it's just a great showcase of how the current market works and why some investors should be aware of what are they actually holding. So that's about it for me.
Tyler?
Yep. So I've been following Maj's work for a long time now. Probably, I want to say 8 years or so. And funny enough, this is the first time I'm meeting Jan, but I had been following a lot of his OTC work, over the years, just by kind of running into, my eyes are on the same companies that he had already, kind of covered. So really awesome to meet him here on this podcast, and really cool that you kind of set this up, brought us all together. Mostly for me, I do a lot of short selling. Obviously am buying companies as well, really trying to find value. But primarily, a lot of my positions are rotating around short ideas. Mostly NASDAQs. I'm not shorting any OTC stocks or anything like that. And I really don't have many OTCs in my portfolio. So mostly, trading NASDAQ, New York Stock Exchange stocks, but, in the micro cap, small cap kind of universe.
Yeah, and what's pretty cool about all of us here is that we're not just either, looking at short stocks or just go long. We're willing to look at investing from, different spheres, and it's really cool. I think myself, I'm a bullish investor by heart. So, but I'm also willing to look at suspicious companies, and that's part of what we did at Geo for a long time. And I think a lot of you, Tyler, Michael, Jan, you still have, you're not closed-minded enough to say, hey, no, we're not going to look at longs too. So I think that's really a cool perspective that we're all coming from. So we don't become blind investors. So that leads us into what we're talking about today, and really about our portfolio protection series. And the purpose of that really is to look at stories and stocks from the bullish and bearish point of view, to really help investors understand what they're investing in. And primarily, even though we are looking from the bullish point of view too, we're really trying to find some unique risks that might really impact either the integrity of the company you're investing in, with management. Maybe there is fraud sometimes, or just shareholder activism in terms of our companies maximizing shareholder value correctly. So it just depends. And that brings us to the current topic, which is PRPL, Purple Innovations. That's the topic of this of the podcast today. And this is a very interesting one because I came across Purple maybe a year ago. I looked at Purple. This is great. This is going to be a millennial stock. It's going to go up just because the name Purple, And I didn't know what they did. And I think, let's look at it. Oh, it's the mattress company, and I'm familiar with them through their really funny and comical commercials with Sasquatch jumping on beds, and you might know the commercial on the company through that framework, frame of mind. So looking into it, I said, this is a stock I think was like $4 or $5 when I came across it. It was hitting a new high. The company came public through a SPAC transaction, and that was, I believe, in February 2018. And the stock hadn't done much since it came public, and through that transaction, they were losing money. They had some revenue. They had a good, decent revenue though. And I was looking at it first through the bullish lens because I had just turned profitable after not making money for some time. And then I started noticing some interesting things in the filings. I think it was their 10K at the time, comparing it to their going public prospectus, and noticing some inconsistencies in some of the commentary, and then just finding some more red flags. And it became, hey, well, I don't want to really go long this thing, but I do want to understand more about what is going on here, what the risks are in the company, maybe from a short point of view. Luckily I didn't short it because the stock is now like $24, $25. And I think what you'll find out that we all concluded together that this is really more of a not short or go long situation. It's more of a corporate governance situation with this company. And, it's going to end up being, we have a lot of questions for management. Hopefully they can answer them at some point. But we think we'll learn a lot from this podcast and really learn about how you just dig into filings, and you can find some interesting things in filings that you sometimes wouldn't believe how companies can go public with some of the way they've structured their corporate governance and ways of, and just in general their business. So I'm gonna lay it off to Michael first, and Jan, you can jump in anytime you want. You guys can have a conversation because you worked on this together. But this was Michael's first project we had him work on, and Mike, why don't you give a little background on how you got involved with this Purple, and how we started getting involved in it?
Yeah, thanks, Maj. So, like I said, about a year ago, first time we met, we had a conversation about Purple, and just started looking at it as far as, I think what were the big red flags at that point in time were the, just like you said, we started going through the filings, the Pierce brothers, who are the founders and also on the board of directors for Purple, I think Tony and Terry Pierce. They had been selling their shares, I think, starting in October 2018 or no, that can't be right. October 2019. And they had, from their initial SPAC going public, they carried a lot of the total shares for the company, and they just started like dumping them off. And I think later again in maybe February, March time frame 2020, they laid off some more. And those are kind of some red flags that I look at, if this is the founders of the company and also on the board of directors, and they start dumping shares, and huge quantities of shares. To me, that was a red flag. And after that, started going over. The next really critical thing that we found was this license back agreement, their filings, which basically gave the Pierce brothers through another company they own, which is Edizone. Edizone is wholly owned, wholly controlled by the Pierce brothers. When they initially went public, they entered into this license back agreement with Edizone. That is, Purple and entered into a license back agreement with Edizone, which basically at that time gave Edizone and the Pierce brothers almost complete control of Purple's intellectual property. They licensed back, although the Pierce brothers gave ownership of the intellectual property to Purple, Purple licensed it back to Edizone and the Pierce brothers for free, forever, irrevocably, without need for future any kind of compensation. And that's really bizarre, for a company that whose sole claim is like how great their product is and how unique it is. And yet at the end of the day, they basically gave away that intellectual property to their founders, who can basically do with it whatever they want at that time. I think some things have changed. They've tried to technically kind of bring that intellectual property back under Purple's control, but it's unclear.
So Mike, let's go back to Edizone for 1 second. So why don't you talk about who Edizone is and how that plays into the picture here?
Sure. So Edizone has been around, I want to say maybe 15 or 20 years, maybe more. It was one, like the Pierce brothers have historic, like they've founded dozens of companies. This is probably one of their longest standing ones, is Edizone. And it's basically like a research firm. Their sole purpose primarily is the creation, the design, research for, I don't know how you want to say it. They call it like elastic polymers or gels or squishy things, cushions, anything related to, rubbery type materials. Some of which they license to like Dr. Scholl's, the implant, shoe implant makers. They license it previously to other cushion manufacturers, manufacturers of various different like bedding products. And that's been like an ongoing thing. And upon like when they founded Purple, it was like they were using that intellectual property. They were, but it was still owned by Edizone and the Pierce brothers. when they were going through the SPAC process, obviously they realized like, hey, we like Purple, we're going to be a publicly traded company. We should actually own the intellectual property that makes us unique. And so it was actually after they went public that they like issued this this license back agreement, or they made it public, because allegedly they had the license back agreement before, but they just didn't make it public prior to going, or like they didn't release it prior to going public.
So was everything disclosed? Everything you talked about right now, was all this disclosed in the original going public prospectus? Do you recall, or was it, did some of it come out later?
I think I would be fair. I think it's fair to say that the magnitude of it was not disclosed in the initial filings, as in the magnitude of the patents that Edison licensed back, or they licensed back from Edison, or the trade names that Edison and the Pierce brothers maintained control over, all of which, from the best that I can understand and from our research, that the Pierce brothers and Edison are still profiting off of, and Purple isn't.
Right. Yeah. So, Jan, you got anything you want to add here before we move on to a little more?
Yeah, sure. I think just for the last point, I think the main thing is that it was a bit too hard, and who controls what from the filings, and I think that that should never be the case. I mean, if you are going to invest in a company, you should have a clear view of what's going on, and this probably was there. The legalese was kind of heavy on this case, so I think that was the point regarding disclosure about all of this. But yeah, I think for me, Purple, when we start talking about it, around March, I think what struck me as curious was the structure of the company, because I knew the structure before, because I covered some of the companies that had very similar holding structure, and how it went public, because the Purple went through public through an Up-C structure, which is a structure that, for example, WeWork wanted to go through, but was kind of like, it was highlighted as a big risk for the investors. And so basically what it means that the founders, the Pierce brothers, didn't really let go of the economic interest in the company. So it was kind of like a convoluted structure from the beginning. And when I saw that, I already knew that, probably they're trying to just, lay off something to the public so that they can profit from it. In a, let's say, unusual way, because of course in the old IPO system, I mean, you just release new shares, public pays for it, end of the story. But with the Up-C structure, what happens is that you really are going to pay the founders for the stake, and you're not gonna get like a new new bunch of shares, but they're just gonna sell their stake in the business. So it's a kind of a sharing agreement, so to speak. So yeah, that when I saw that, I already knew like, okay, that's something like relatively fishy, because there was, for example, Spark Energy, which I covered in depth in 2017, and they had the same structure, and it ended up pretty badly for them. So it kind of showcased that the corporate governance might not be that great. So for me, that was kind of the red flag that I noticed when I started to look into it. And then of course the license back agreement, I mean, it's just insane. It boils down to simple things. The company owns the IP, but doesn't get any royalties from it, right? So that's just the bottom line. And the Pierce brothers get the royalties. And recently when we were writing the update for the report, I noticed that of course the Pierce brothers departed the company, so they're not necessarily super involved right now. And when they did that, the company basically purchased some of the IP back, so to speak, from Edison, because the IP was used by competitors of Purple, right? And so for a long time, actually, Purple, as a public company, did not get any sort of royalties from their own IP assets that were used by competitors, which is pretty interesting. So the Pierce brothers were basically getting all the benefits, while Purple had to actually create such great marketing to be able to sell more, while they could have just gathered royalties. And so what happened was that when the Pierce brothers kind of departed the board, they had to the company actually got back control of some of its IP that was controlled by the competitor, and they paid 8.6 million for it. Purple, right? They paid it is on 8.6 million, which just means like, okay, with the Pierce brothers were like, okay, well, maybe, you know, we need to give them back the control, but, you know, at least we're going to get something from it. While of course Pierce brothers also made like 250 million selling the shares of their stake in Purple. So yeah, a lot of interesting stuff, I think, regarding the corporate governance, which, you know, as Maj said, I mean, it doesn't necessarily mean that this is a clear short or clear long, but it's just something that people should know, because I think at the bottom, it's about people, right? I mean, markets are about people, and you should scrutinize how people behave, and whether, you know, the current management of Purple was okay with this, and they signed the license agreement and so on and so forth, which they knew that Pierce brothers would, you know, disproportionately benefit from it. You know, maybe that's something to look into and to keep in mind for sure. So I think that's just for me.
So basically, you had in a situation that would have been more beneficial to shareholders, would have been a situation where when they went public through Purple went public through the SPAC, everything would have been rolled up into the public company, right?
Yeah, exactly right. I think that would be, I mean, normal process would be without the convoluted Up-C structure. So, you know, because that structure really benefits the insiders. I mean, the whole point, if you just, you know, Google WeWork Up-C structure, you will get quite a more detailed analysis than on Purple, because not many people wrote about Purple and the structure. But basically, if you look at WeWork, the whole point was that the insiders wanted to take advantage of tax setup. The structure is usually used for tax advantages and so on and so forth. So basically, you know, you know, if you didn't do that, you would just have a normal, let's say, normal SPAC transaction. You would get you would get control of the IP, you would get the royalties. And the whole point is we don't really know how much of the royalties they missed, which, you know, could be a large portion of their net income, because royalties are of course 100% margin, right? So the company was struggling to produce net income, but if they had the royalties, I mean, they could easily perhaps even start profiting from the very beginning.
Yeah. So now there's this new information in the 8K that you came across here. Does it obviously, you know, Purple paid basically the Pierce brothers through Eddyzone $8.6 million. Was that what it was, Jan? To get control, get some of these patents, but does that also affect the licensing rights too? So does Eddyzone still retain the rights it had to be able to license the technology that Purple might be using, or? They
didn't really publish the whole agreement between those two parties, but in my understanding of the 8K, it just should say that Purple has the control now and will start receiving royalties from the usage of this IP with the specific competitor. But it was kind of like not very clear what's the extent of the whole agreement, because it was not made public. But yeah, I mean, just the fact that they had to pay for it is just on its own enough. But yeah, there might be some further analysis that you could do from that and deduce maybe some sort of like also idea what kind of lost royalties they had and so on and so forth. So
the question, you know, an interesting question to mention will be, well, you know, what else is Eddyzone benefiting from that Purple might not be benefiting from still right now? So this particular new information was based upon, when you say competitor, you mean a competitor of Purple? So, or are you talking about Eddyzone being the competitor here?
No. Eddyzone is not a competitor to Purple. Eddyzone just owns the IP, but the IP was licensed to competitors of Purple. And at some points, you know, it was also actually the IP was restricting Purple from coming into some markets, which again, not very clear what's the extent of the whole thing. But some of the IP or the licenses was actually, you know, exclusive for countries in Europe, I believe, and Japan. I'm not sure, Mike, if you remember all the countries.
For sure, at least in Europe, they state that outright in their filings that they are prevented from entering some markets in Europe. However, it seems to me that those same, from what I can tell, they have very similar agreements with a manufacturer in Japan and in Australia. However, they don't explicitly say in their filings that they're unable to enter those markets. So for sure, all we know from their filings, they cannot enter parts of Europe.
But you did extrapolate somewhat from the language, I think, in the report we'll be publishing. that you might be able to deduce that they're from the way they describe these parties, that they might have issues competing in those other markets, right, outside Europe, Japan, like you said.
I personally think that's the case. However, like if I was like testifying in a court of law, I would have to say I don't know, because I think the pattern that we see here is very opaque. Like they're intentionally vague with everything that they say, and I think if I, as an investor, that just makes me concerned, right? Just tell me what you mean. Like that's when I read their filings, that's what I want to say, because it's so unclear what they're getting at. Even with the license back agreement and all these things, like the license back agreement itself that gave Edison all those rights to their IP, it's changed so many times. The part that Jan brings up now is just the most recent change. But like initially, the board, like initially Edison could license it to whoever they wanted, any of the intellectual property, as long as they got the permission from the board of directors of Purple. Then that changed to say a few months later, maybe a year later, that that Edison is no longer seeking new contracts or to extend contracts. And then now like they're buying back the intellectual property, but we don't know what intellectual property, we don't know who they're licensing it to. It's all this lack of clarity. And even the fact that at the time, the board of directors consisted of at least 3 members, when they initially went public, to say, hey, you can continue, Edison can license to whoever they want as long as they get board approval. At that time, 3 members of the board, voting members of the board, that is Tony Pierce, Terry Pierce, and Casey McGarvey, all received benefits, as in compensation from Edison for those licenses.
Yeah, not to mention that also, like in the beginning, the voting rights were also residing at Pierce Brothers, just because of the structure of the corporation. So basically, I mean, they could do whatever they want, right? But public got like a nice sweetheart deal of like just buying some equity without real, thing like Snapchat, just the usual thing that happens nowadays. But yeah, so I mean, that's kind of how it went. It was certainly, I think, conflicts of interest for sure in some ways when considering the public shareholder.
So, earlier you said that Edison wasn't a competitor, but really, when you look at maybe it's not, under the terms of competitor, but it really is, because they're basically selling some of this intellectual property through licensing arrangements or to competitors of Purple, right? And until now, or at least we've maybe even still now, collecting a substantial amount of royalty revenues, royalty fees from these competitors, right? Which is not going to and helping them grow in potential markets that even Purple can't get into. And a lot of it, this is a very competitive market space. This mattress company, this industry, you have several competitors. You got Casper, and you have Love, right? And you have several other ones here. I think you have we got Tempur Sealy. We have Sleep Number Corp. These are all public companies. That's SNBR, TPX, LOVE. We have, and then Purple, right? And then Casper, CSPR. So, and this is all, I mean, I think this is all about spending money, getting out there and marketing dollars to keep getting market share. And Purple is doing a pretty good job of that. I mean, they're definitely getting market share, and they're actually profitable now. A lot of companies are not profitable in this industry. But at some point, they maintain period multiple, which I think Purple has over some of its competitors. You need to be able to get that, market share. And if you're limited to what you can get, that should maybe eventually it's going to affect your ability to grow and maybe your market, your multiple. So I think it is competition. Now, what we definitely got to figure out here is, what does this new agreement mean for Purple now? Have they now the Pierce Brothers did a great, hey, whatever you want to call it, whatever they did, they did what was really good for them, right? They came out, they went public with this SPAC. Stock goes from, eventually here up to $24. They sell all this. How they sell all their stock, Jan? Are they all out?
Yeah, according to my understanding, they converted all the stocks. So because there were two classes of stocks, and they converted. And to my understanding, the latest offering that they did, they should have sold everything. Yeah.
Yes, they sold cash in there, and then received more money through selling that $8.6 million transaction. So it was a beautiful thing for them, beautiful exit. And the question now, though, is not how does it look for current shareholders now? We put all that aside. That'll happen now, right? And they possibly had a way of maximizing, their take from this. Looking at it now, if Purple now retains all the rights to the royalty fees that once belonged to Eddyzone, that'd be interesting, right? I mean, is there a bullish case there?
I mean, for me, I think there kind of could be, but I mean, as you said, it's a tough competitive market. I mean, yeah, a lot of the bulls like to point out that this is a intellectual property driven investment, which is hilarious. While they didn't really actually get the benefit of the IP, of course they can sell it and so on and so forth, but still they sell the product. But I mean, yeah, there could be a way of like them growing a lot more. They announced new manufacturing capacity, so they have these kind of max things that they like to talk about, which is just a production process of like increasing margins and so on and so forth at some sort of capacity. So they're now very bullish, and like the whole transcript for Q2 was relatively bullish because they had a lot of orders and so on and so forth, and they had another record quarter. So I think that like for now, certainly the revenue can continue, but there's just the question of how they're going to deal with the IP situation going forward. And certainly the new 8K can bring them a bit of benefit, but there is still other IP that I think Eddyzone can benefit from. So it's not really according to the 8K, was specifically to one competitor. So I think that there might be some still leftover things that the Purple then might have trouble with, or overcome the problems, but just that should not be the case for the company. So there might be bullish case for sure. Of course, the revenue has been growing like crazy, but there could always be these challenges in the late stages.
Actually, I stand corrected a little bit. So I mean, I said bullish. You know what? They found a way maybe to get some royalty revenue from this large competitor, but we don't know if it still restricts Purple from competing in some of these markets. That could still remain, right? We don't know that yet.
That's what I was about to say. Is because, okay, great, they got the intellectual property. Now what? They still have to they still have these contracts in place. Even if they own the intellectual property, we don't know the terms of these contracts. These contracts that they have that prevent them from entering Europe, possibly Japan, and possibly Australia, they could be for 10 or 20 more years. So then what? What's funny is that even going back to their very first prospectus, Purple had beat the drum of international growth, and as best as I can tell, the only international expansion that they have is very, very little into Canada. That's it. They and they're not even allowed, for whatever reason, they don't sell all of their mattresses. They're limited into the types of mattresses they sell there. So could that be part of this intellectual property limitation of them entering that market? I don't know, but to me it's interesting, because if you live in Canada and you want to buy a Purple mattress, you can't buy. It's not like in the United States where you have they have various varieties, various types, sizes. No, it's limited. You get what you get, and I think it's personally because not with some of the competitors that keep them from Europe, but there's another competitor. It's called IntelliBed. It was one of their first. What's funny, this is one of the Pierce brothers' first ventures, is that they actually started by selling IntelliBed. They licensed that intellectual property from Eddyzone to IntelliBed, and then basically like broke their contract. It was supposed to be an exclusive contract with IntelliBed to sell this grid, the same grid type mattress, and the process to make it. But then they started making their own bed with the exact same technology. They got sued by IntelliBed. IntelliBed won. They got a cease and desist order, and IntelliBed has the rights to manufacture and continue to use that process, and license that intellectual property, those patents, back to Edison. And so I think it has to do with that aspect of it, that this IntelliBed has the rights to a certain type of proprietary technology, and a lot of Purple's mattresses are too similar, and then they therefore cannot enter Canada to the full extent.
That's a good observation. I'm glad we're talking this out, because now that I think about more about this, so one of the things that we do a lot is we look from changes in filings over time. We're looking at the risk factors, just all this discussion in general, and see if we can find inconsistency or new pieces of information. And one of the things we did find in one of the filings was that all of a sudden this disclosure popped up regarding facing competition from a large competitor. Did they say it was in the U.S., Mike, or did they say Europe? Did they say where that competition was coming from?
They didn't. It's from the United States. Like I said, they don't really have an international footprint, a real one. I mean, they have, like I said, they sell in Canada. They may sell some other places, but as far as percentage of revenue, only in Canada. So it's a U.S. issue. So
interesting. So I'm wondering, Jan, if this 8K might be referring to that, having to do with that competitor, you think? Because
I think
what they said was that in the filing, what one of the companies, the larger competitors that they licensed their technology to, or I don't know if it was Edison or Purple, is gaining, is growing quickly and gaining market share pretty rapidly. They then use the word market share. So that may be the case. And if that's the case, maybe it's just we're talking about this 8K is referring to that. But what's interesting from that to maybe extrapolate is that, wait a second, maybe Purple starting to see this, starting to get a little scared here, that it's getting, this competitor is getting big enough where it makes sense to take some of that royalty fee. And what we really need to understand what that's all about, and how the company has to really come clean with that, I think, a little bit more.
Yeah, I think it's interesting, since the Pierce brothers have left the business, kind of, then it really becomes its own. And now it's the question, of calculation, whether the investment for getting the IP, because they paid 8.4 to be completely precise, not 8.6, but it doesn't really matter. It's still $8 million for what they basically own. And so, well, if you approach it in a arm's length transaction, then of course that would be just calculation of your internal rate of return, right? So it's like whether it makes sense to pay 8.4 to get royalties, which probably 8.4 million is not really the smallest portion of the royalties. So I guess they are expecting that they're going to get some money back eventually. I don't know why why else would they do that, because it's not for cosmetics. Unfortunately, a lot of bullish shareholders did not really point out these licensing back agreements. Nobody really talked about it. They all talked about IP of Purple, but nobody really talked about the agreement. So, I think there is some certain intent, of course, in it. And also, it's noteworthy to say that the 8K came just one day before the Pierce brothers announced that they were going to leave the company. So I think it was just, for sure, they had some calculation, or at least, well, that's the idea of fiduciary duty, right?
Also, in that 8K that came out in August, it does reference the gel matrix and IntelliPillow. So IntelliPillow is like the pillow version of the IntelliBed product. So I would venture to say that this is related to that competitor. If you notice that gel matrix and IntelliPillow directly reference the technology they licensed to IntelliBed.
And to be fair, by the way, you like the pillow, right? You have the pillow.
Well, I don't have the Intella pillow, but what's funny is like we've been working on this a long time. My sister and her husband got they got a purple something and they loved it. And they're like, you got to try this pillow. I'm like, and they bought it for me, and it's honestly great. Like I don't have the mattress, but the pillow is amazing. So the products are good. Like I don't think anybody here is our issue is not the products. Everything that we brought up is the corporate governance issues. But you can have the greatest products in the world and management drive that company into the ground.
I'm
it's
wondering
a great pillow.
I wonder if early on the Pierce brothers, maybe when they set Eddyzone up and the way they envisioned things, maybe they didn't make enough money to be getting from the royalty arrangements, and that's why they decided to launch a purple brand. That's one thing I was thinking about. I don't know, but so
it could be.
Go ahead.
Just one quick thing there. Purple did actually pay Eddyzone royalties at the very beginning. It was not public yet, but it was a private company, and Purple did pay about I think 6 million or something like that in royalties to Eddyzone actually. So back when Eddyzone still owned the properties, the IP. Yeah. So basically, 4 million in 2016 to Eddyzone. So there is also a kind of like a scale where you can actually kind of make a proportion out of it, like what kind of royalties they might be missing on as well. But yeah, might be what you say.
I think there's a calculation in the report that we have in terms of how much royalties we think might be there.
Yeah, there is an estimate, but it's just wild estimate. It's really it's tough to say what could be the royalties right now. And we have a new piece of information, or let's say relatively new since it's middle of August, the 8K. But it's 8.4 million for something, and we're gonna see what kind of stream of royalties that is, and so maybe we can estimate some of the losses that Purple, or not losses, but the revenue that just should have been theirs, but.
So assuming that there's still some issues with the ability of Purple to compete in some markets, do you think there's room for an activist to get involved here at some point to try and, maybe improve the structure of, what Purple owns and maybe wrapping Eddyzone more into the company? Or is that a lost cause?
I think, I personally think that that's probably unlikely. I don't really know who exactly owns how much of Purple right now, just because they did the share offering recently and so on and so forth. But I think if like wrapping Eddyzone into it, they would have to pay Pierce brothers, and I guess they seem to be like in it for the money. I don't think they were just going to get it for free. So of course, I guess it's possible, but the price probably, and especially in the early growth stages, let's call it this. Because the revenue has been booming now, I think a lot of people see a lot of opportunity. And as we discussed, it's a great product. And also compared to Casper, for example, it's doing really well. And Casper has Casper, they don't really, I think they don't really manufacture everything. They outsource some part of it. And so Purple is not really doing that. So they are trying to, do their own, and they do have the IP. So basically it's a bit different, but yeah.
And Casper's losing a lot of money. I think, let me see, look, they're just losing.
I think they are. Yeah, they're losing a lot of money. Like Purple has been cash flow positive, in the past 2 quarters or so, and they can pay, they extended their credit facility and so on and so forth. So, the business is just set, for growth. And so they're in the early stages. So that's why, of course, bulls will say, well, we lost money. Okay, fair enough. Who cares? But we can make money in the future, but you never know. There might be some restrictions, some problems. And again, you have the management that was okay with all of this, which, just shouldn't be the case, because if you're the steward of the capital of shareholders and you're okay, like, why not? We will, make money for Pierce brothers. So that's the whole point of it. Yeah.
Okay, great. And I feel so. If you're looking at by the way, we haven't talked about the size of these companies. So you have Purple, is forecasted to do, I think, 635 million revenue in 2020. You got, I think, Casper around 500 million. Then you got Love, L-O-V-E, Lovesac, about 300 million. Sleep Number, about 2.1 billion. And Tempur Sealy International, about 3.5 billion. So, and most of these guys are losing money. Tempur Sealy is making money, actually, and now Purple is making money too. So, Mike, you want to go over the valuation here real quick and some of the information you have there before we end this?
Sure. So basically what I just did was a price per share, price to sales multiple valuation. As Maj just said, quite a few of their competitors aren't profitable. So like to do another type of multiple, like free cash flow or price to EBITDA or anything, it just doesn't, it becomes incoherent. So I thought this would be the best metric for that. And, as we said, some of the competitors, Casper, Lovesac, Sleep Number, Tempur Sealy. I also threw in there for the valuation, like other furniture type stores, Ethan Allen, Lazy Boy, who make furniture type products, and distribution options. But basically what we did is just did the price to sales based on trailing 12 months, about 2020 estimates and 2021 estimates. And, what's crazy is that Purple's valuation is 2.5 times it's the competitor's average. The average for the trailing 12 months price to sales is about 1.1 times multiple, and Purple's is 2.65. That is, a huge difference as far as what apparently the market thinks that the company's worth. And which I find, as we've discussed, I have a really hard time wrapping my brain around that, given really an unknown ability to grow, an unknown competitive landscape. And moving forward, it's kind of the same. It's kind of more of the same. And for 2020, based on estimates, the average in that group price to sales is 0.93 multiple versus Purple's 2.2 times multiple. So again, more than 100% difference. And, granted, Purple's profitable. They have good products. I can attest to that. They do. However, none of these companies have the same restrictions on their ability to grow, internationally, or to expand product, differentiate their products from their competitors. And that's really hard that's my perspective of that valuation of 2.65 trailing 12 months is really hard to wrap my brain around, because their intellectual property is in so many of their competitors, maybe not well-known competitors, but competitors in the bed-in-a-box, industry. There was a study that came out, I think, in August 2019, something like that. And at that time, there was I want to say 165, 150 something maybe bed-in-a-box companies operating, in the United States. And if their intellectual property is in a fraction of those, what is the distinguishing factor? Why are we giving them this valuation, this premium valuation? I guess that's something for investors to decide.
Well, the company could, potentially, clarify that with being more transparent with what's going on and potentially unlock value. Maybe if our assumptions are incorrect, maybe there is a justification for a higher valuation because it's growing faster than the comp's not profitable. But to be fair too, we haven't looked at the business model closely at all, or the accounting. So,
And I think, it could, like, let's say all these contracts, all these licensing agreements, they all are wrapping up in 2021. Then yeah, I could totally see that this 2.65 multiple or 2.2 going forward for 2.2 for estimated 2020 sales to price of sales. I think that could totally be reasonable if all these contracts, all these licensing agreements are wrapping up. And that's why the Pierce brothers got out, because, it's over.
They
Right?
drained it. They drained it completely.
and they know what's coming. So, interesting. Hey, so, Tyler, anything you want to? I'm sure I didn't bring you in earlier, but
yeah. So first off, I think you guys put together a really great report. The business is pretty interesting. It's pretty amazing how strong of a marketing campaign they've put together, writing this idea of the purple mattress, because I've gone ahead and went onto all their social media platforms are pretty much booming. Revenue's booming. I see them on TV a lot, but, as an investor, right, and kind of what Jan, pointed out, right off the bat, as soon as you kind of open up these filings, there's flags, right? And, when you are researching these companies, knowing what the flags are, who's the banker, kind of, how the company went public is kind of like the one that stands out here. And, as an investor, it's really, I think, important to kind of go backtrack, the company's history and learn exactly what's going on here. And, as we see in this, this is a really awesome kind of case study where you see how important it is to, do your homework, do your due diligence, because, this is a little bit, can you trust this management team to kind of allocate your money because of these kind of back end business deals that are, taking place? It is concerning. And when you're talking about, portfolio protection, do you want to be holding this company or kind of even paying a little bit of a premium to have this in your portfolio while there might be that bull case upside? It's more of, can you sleep easy at night here? I'm not saying, I don't know if this is exactly, a great short, because we kind of are in those early growth stages, like Jan had pointed out, but, as an investor, you really got to weigh these risks, and it is concerning. And, I love the report. I thought it was a great report, as far as maybe getting short something like this that does have a great product, has that kind of marketing, tail end where, you have, let's be real. There's a lot of investors out there that have money that are buying up these stocks, buying up these stocks. And, where does it end? Well, maybe we do have that kind of growth slowing here, because of, the situation that you guys are talking about. But it is a really awesome case study, and you guys did a really great job, kind of putting everything together.
Thanks, Tyler. And I think you make a good point. This is really about time. And shorting is a lot when you're not dealing with accounting fraud or even with accounting fraud, I should say, but just outright fraud where the business doesn't exist, for example, sometimes, to eat anywhere near the magnitude that's being disclosed, it's really hard because you have to time it right. So in this situation, we're more looking at an unknown. If the risk we're talking about is true, this party maybe does end at some point in terms of the rate of growth, and that's when the stock maybe gets dinged, if it does get dinged. So timing that is really tough, and it's possible that because as Michael, you talked about, some of these licensing agreements coming to an end soon. Could that be the catalyst? And that'd be really, and then maybe an interesting bet to take at some point with options at some point as we get closer and closer. But I don't know. It's a tough call either way. But I think you make a good point, Tyler. Even if you wanted to go along this, you really want to go along, given some of these unknowns, and it's a price we have to pay for some uncertainty sometimes. We just don't know here, and I would be comfortable sleeping at night not knowing the whole story there of a very important piece of the story.
Even with a purple pillow?
Well, I might get that. I have a horrible neck. So I'm going to get that. I'm going to do a little Peter Lynch analysis and, do the buy what you know thing. Maybe I'll love it so much I don't care.
Sure,
I'll never wake up. Maybe I'll love it so much I'll never find out. But yeah, I'm just glad this is over, because the whole, I remember having to like go on YouTube and type in purple and look all the commercials, and every other commercial was a purple, another competitor. It's amazing the competition out there. And you had to go, just all you got to do is plug it in YouTube, and you'll see how many competitors are out there vying for this market. And they're even talking about each other, the competitors. Yeah, you might got a purple, but ours is better, and vice versa. Or you can keep your purple, try ours too. And it's an interesting market, and and they've been able to raise a lot of money, purple, in the public markets. So they have some ammo. Yeah. And so I guess anything else before I end this, guys? Any more comments or questions or?
I just maybe have one. Like, I think it's, for people who are interested in the company or even our shareholders, just like take good note of these kind of things with the contracts, some of the licensing bank agreements. I think it's like relatively straightforward analysis from here on out. Like, if you read the report, you can understand what is happening, and you can kind of keep an eye on it and actually understand, whether this is getting worse or getting better, in a sense of like, okay, some of the stuff is expiring and so on and so forth. So I think it's like just one thing to point out and to keep in mind, and just to track. It's like relatively easy, even though we don't know that much stuff about it. I think it's relatively straightforward to keep on top of everything.
Yeah, I think Purpose is a great example of just reading filings, not trusting everything you hear in a conference call or a press release, taking the time to read footnotes, taking the time to look at differences between filings. You can either do it yourself by looking at filings, or if you have Reuters, Centio, or FactSet or any other program, a lot of them will try and let you know through form. They'll highlight what are different in filings. So really, if you're going to invest in stocks, individual stocks as part of your career or even part-time, don't miss out on an opportunity to take wonderful public information in these filings to help you with your thesis, and say, man, I should have found this. I wish I known this existed. It was right there in front of my eyes. So, like Peter Lynch says, it's all about turning over rocks. Turn them over and keep looking. Might be boring, but it's worth it. And a lot of times what we're doing here turns into really great bull cases for us. We're finding information in these filings, especially in NanoCap, at MicroCap World, where we hunt for our bull opportunities. And that's what we use it more for, actually. Personally, what I do, I'm looking for long ideas all the time. And any kind of short idea I stumbled upon usually came from the long research, going through the thesis and then finding some information. Except we were doing China, which when we were doing China shorts in 2010 to 15, we were looking for shorts after being long for a while. So yeah, this is a great lesson, a great case study, and how to go about some research. And you guys did a great job, man, fleshing this out. Jan and Michael, I really want to commend you for your work here, and you did it pretty quickly too. You guys you're going to be a great team, and I just hope that we can just keep using this as a lesson to move forward. We have some more, I think, queued up, and it's going to be exciting doing this again. And I like this form because we're not saying go short. This is really professional and not rah-rah on anything here. And I really feel something I wanted to do for a long time. And I'm glad you guys are part of it. So I will end it in terms of, before I let you guys say goodbye. So sorry, that we ended this, and I like what you guys did here. You ended this conclusion by basically asking shareholders to ask some questions. And I'm going to read off these questions. So we conclude it like this. Why did Purple choose to license back to Eddyzone the intellectual property it was assigned? How has the license back agreement benefited Purple and or its shareholders, excluding Pierce Brothers and Mr. McGarvey, one of the players in the story? To how many Purple competitors, both internationally and the U.S., does Eddyzone currently license Purple's intellectual property? What is the total revenue from royalties Eddyzone generated from Purple's assets since the company went public? When do Eddyzone's contracts with competitors of Purple end? And what are all the geographic regions where Purple is prohibited from selling its existing products? Responsible questions that we came up with that if you're a shareholder in Purple, you might want to ask the company in the next conference call or send them a letter. Or just, it's always good to end this analysis with questions sometimes. So great, guys.
Well, thanks for everyone's time, and I enjoyed the conversation. I hope to do it soon again. Thanks.
Yeah.
Maj, thanks for the invite. Jan and Michael, you guys did a great job on the report. And this is a sweet idea, cool little podcast of portfolio protection.
Yeah, I appreciate it. Thank you guys, everybody. Thank you, Robert, for having us.
Of course. If I can finally put in my 2 cents, my wife and I bought our mattress from Walmart. All right. And it's the best friggin' mattress I've ever had in my life. Okay. So if that's any indication. No.
If it's from Walmart, it may be licensed from Purple.
Well, you're still young. So.
Dude, I'm telling you right now, this mattress is amazing. It's the best. Like we ordered, I think we were looking at Casper and a few other ones, and like we got the one we went to a friend's house and we sat on the mattress and everything. We're like, this, and he was like, guess where I got this from? We're like, no, where'd you get it? Walmart. So I don't know. I'm just saying it was an amazing, it was, we still got it, you know what I'm saying? But hey, I'm not a shareholder in Walmart or Purple, but I'm long Walmart mattresses.
Good job. Yeah, there's an investment you're making in yourself. It's perfect.
Oh, Maj, I appreciate that. Thank you. All right, dude. Well, you want to take it home? You want me to take it home, Maj? What do you think?
Yeah, take it home, Bobby.
All right, we're landing the plane again. Avoiding the Crowd with Maj Soueidan. You can find this podcast wherever you get podcasts or listen to them. You can also watch this interview or watch this panel or episode or series or, the series, I guess we're calling this, on our YouTube channel at youtube.com/SNNWire. You can follow me on Twitter at Bobby K. Kraft. It's BOBBYKKRAFT. You can follow Maj on Twitter at Maj GeoInvesting or at GeoInvesting. Anybody else have Twitter accounts? Come on, let's plug away. Let's go. You got Twitter accounts? Jan, I know you're on Twitter.
Sure. Of course. Yeah. Just my name. So you should be able to easily find me. And I kind of have an odd tweet schedule between OTC and some frauds or something like that. So yeah, if you're interested in long OTC and short selling, then certainly give me a follow. Be very much appreciated. Also, I have a new OTC product, which I would love to talk about at some point as well. So definitely check it out.
We'll get you back on for that. Michael, Tyler, you guys got social media accounts or Twitter accounts?
No. Sorry.
Michael is short Twitter. No, I'm just kidding. No, I'm just kidding. He's not actually short Twitter. But
I do have a Twitter account. It's at Augury Research, AUGURY Research. I don't really tweet too much, but I might throw out a couple of short ideas on Twitter every once in a while.
There we go. All right. Well, I think we're there. Gentlemen, thank you for joining us on this series. I'm sure we'll see you all back on here again very soon. And thank you, Maj.
Thanks, guys.
Thanks again.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN.Network and Maj Soueidan are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy, sell, short, cover securities in any company mentioned and may profit in the event those securities rise in value if we are long and fall if we are short. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.